Welcome, everyone. Look, really excited about today's webinar. I've got a fantastic guest with us, Yael Tamar. She's a co-CEO of SolidBlock. As we will discuss during our presentations today, SolidBlock has really been a leader in digital securities, basically using the power of blockchain to tokenize real estate assets. And here at Atlas One, this is really one of our big focus points. All the offerings that we have available are real estate linked. We think real estate is the ultimate use case for digital securities. So let me talk a little bit about format, and then I'll ask Yael to also just add a quick introduction to herself. So I'm going to present a quick overview of Atlas One and our platform here in Canada. I'm then going to hand it over to Yael, who's going to talk us through one of the most successful offerings that SolidBlock has done in the real estate space. We'll then have a bit of a forum and a discussion, and we'll also then answer your questions. And just a message on that, don't wait with your questions. Don't wait till the presentation's finished and start adding questions. This is Zoom. We collect them as they go, and I'll make sure that we go through all of your questions before we end the discussion today. So before I start, Yael, quick intro to yourself.
Okay, sure. Hi, everybody. I'm Yael Tamar, co-CEO and co-founder of SolidBlock. Our company, as George mentioned, was the first mover in the space of tokenized real estate offerings. And my background is in capital markets. Started as an analyst and a broker-dealer on Wall Street. Moved to Israel, was an M&A in private equity, financial engineering for 10 to 15 years, then moved into startups and fintech, worked on several real estate IPOs in Israel, on also structuring different funds, came to blockchain 5 years ago, crypto and blockchain, realized the power of the technology and wanted to apply it to one of my favorite spaces, which is real estate investment, which I believe has a lot of challenges that we're solving. And now we're here because, we're passionate about democratizing real estate.
Terrific. All right. Well, without further ado, let me get started. First, a little bit about Atlas One. So I've already been through the agenda yeah, of course. Most important thing I need to do before I start is just a bit of a disclaimer. So we're not here selling any specific securities, and the securities that we do sell are only eligible to certain investors. All of our processes, as I'll talk about later, is via our platform, and so no one should consider this a solicitation for any offerings. And obviously, any investment should involve the proper advice and advisory that is required. So first of all, I want to sort of reframe the opportunity again, and why real estate for us is such an important piece to the blockchain industry. It's a $300 trillion industry, is sort of the big number to talk about. And many people here in this call is from Canada will know that real estate in Canada is a substantial market. It's a market that many people invest in privately, directly, or via public securities. And so we think that we're only just scratching the surface. Only 10 trillion of that amount is what we would call genuinely liquid and available for investment. So it is, a big market that we think there are a lot of opportunities to use innovation like blockchain, to go after. Now, the DSO market itself is still relatively small. It's about $1 billion, according to our research, of which about 400 million is traded, including the case study that Yael's gonna talk about. But what's been done so far has been, real estate has been a big factor in that. So yes, there's been some technology and finance related offerings done in digital securities, but real estate really is, the big piece of that. And as we'll talk about, it's because of we think it just presents a great use case to use blockchain and digital technology to offer it to a greater amount of investors. So what do digital securities actually do? So first of all, if it's not not clear already, what digital securities are basically a digital representation of an ownership or economic interest in an underlying asset or investment. It's reflected on the blockchain, so ownership is always known because it's transparent and visible. There's no share certificates to worry about. There's no registration at a custodian that you need to rely on someone else to upkeep. The blockchain effectively keeps the ownership record. And because it's digital, it's instantaneous, you can make transfers, and hence one of the first real benefits is that it really streamlines cap table management. All investor changes are recorded digitally and updated instantly. Moreover, because investing has a lot of complexities around who can invest. So here in Canada, a lot of private securities can only be invested in by exempt investors or accredited investors. It's much easier to create white lists of investors who are eligible to purchase securities and therefore manage that process more efficiently. And I talked about the ease of transferability, and this is one of the topics I'm going to talk to Yael about is, trends that we start seeing around listing of these securities. And this can be done, again, because the underlying process of making ownership transfer becomes much easier when it's on blockchain. And then finally, corporate actions such as rights issues, dividends, event triggers and the like can start to be built into the smart contracts that underlie digital securities. And so that, from my experience in banking, is always a complex, inefficient process. And so smart contracts and security can really optimize that. So what we're hoping to do with digital securities is really enhance the accessibility. Private securities, real estate has often just been the domain of either high net worth or institutional investors, or people, getting together in investment clubs and trying to make a go of themselves. We think there's something in between where we can offer a broader range of securities on the private side to investors. The second thing is we're going to lower the costs. Because of all the efficiency benefits I talked about earlier, we think that we can make it easier to access and actually lower the transaction cost related to that. We can create new innovative products. Roughly 10% of the DSOs that have been issued are basically economic interest digital securities, where it's not debt, it's not equity, it's either hybrid or where you own a piece of the cash flows or a piece of the revenue streams. And there are various combinations of financial structures that you can start to innovate around when you have much more efficiency and you can build features into smart contracts. Faster settlement time, and this is a big one. Anybody who's invested in private equity or in real estate directly knows that it can take days, weeks, even months to actually settle a transaction, whether it's the paper documents you need to sign, receiving the share certificate, exchanging the funds. We think we can collapse that to days, hours even, when we're dealing on the blockchain. The only limitation still is cash. And we as an industry, we're working on that. The cash settlement process, particularly here in Canada, is rather lengthy, but overall, you can really collapse settlement times. And then, of course, building secondary markets and increasing liquidity is the other key benefit that digital securities offers. So finally, a little word about us at Atlas One. So, our vision is to bring access and liquidity to private markets through digitizing securities. So we are BC Securities Commission exempt market dealer. We're registered in BC, Alberta, and Ontario. We provide advisory services and deal structuring services for issuers. We then do the whole issuance and management process using blockchain technology. We also provide research and analytics. So we've created a research portal, which I'll talk about in a sec, that provides transparency to the market. And then, of course, we raise capital and provide investment opportunities for investors. So we have two platforms. One is our investment platform, and that's where we have one of our issues right now, where SolidBlock is the sponsor. And there you can sign up an account with us. And you'll be on board and you'll be able to invest in these particular issues. I'll go into a little more detail on that at the end of the presentation. And then finally, we also have a research terminal. We track 70 plus digital securities that are out in the market. We've created our own index to track the capitalization of the market as well as the market movements. We believe in transparency, and education around this is going to be a key thing to get investors involved. And this platform, which is free to sign up, will start to do that and provide increased access and visibility on this particular market. And so before I hand it over to Yael, just a final thing. If you're interested in signing up, if you're interested in more information, please get in touch with us. You can go directly and sign up on our platforms at invest.atlas1.ca, or you can email us at info@atlas1.ca, and we'll be happy to help you out and to work with you. So without further ado, I wanted to hand it over to Yael now, the guest of today, to talk about the fantastic offerings that SolidBlock has and a case example.
All right, thank you so much, George. And that was such a great presentation. Can you please enable my screen share?
Oh.
That would be in the participant, in the panelist thing.
Okay, I've just made you the host so that you should be able to do it now.
Okay, that's a lot of responsibility, George.
It's easier than me trying to figure out how to do that. Do the share.
Okay, so you can see my screen, correct?
Yep.
Okay, fantastic. So I want to talk about I think the first and one of the most significant deals that were in real estate, tokenized real estate to date, and that was the AspenCoin, the issuance of the AspenCoin. And it's significant because it was not only because it was the first commercial real estate tokenization, but also because it's now trading on an exchange, and I can show you how the textbook tokenization should work, right? So the AspenCoin was basically was created in an effort by the management company of the St. Regis to facilitate a recap deal. This deal, and I'll explain to you, I'll explain it in all the details shortly, but this deal raised $18 million in under 4 months, including the structuring, and the investors actually got 30% now token upside in under 18 months. Now, let me explain to you how that all happened. It all started with the management company called Elevated Returns that basically works with St. Regis. They were looking for a way to have to do a recapitalization, right? Some of the investors, that's my cat, sorry about that. Some of the investors in the deal basically wanted out, and they considered several options. So one of the options that they considered was going public. So they were thinking about doing a single asset public REIT. Now, they soon discovered that was a very expensive undertaking, costing around $2 million. And that's a lot just to raise 18 million. And also the reporting requirements, of course, for going public are very high. Now, this is actually very important because there's so many other assets, real estate and otherwise, of let's say under $50 million that are called small cap stocks that don't go public anymore. That's one of the reasons why. It's just very expensive to go public, and the liquidity on the stock markets for any low, like small cap stock, is very limited. So as a result, you see all these big IPOs, right? And let's say big public REITs, and you don't see small cap stocks in real estate or otherwise on the stock market that often. So they basically scrapped that idea. That was not in the cards for them. At the same time, that was 2018, they started hearing about what's called a security token offering, which is a private placement, yet because it's placed on a blockchain, the ownership is recorded on the blockchain, the owners of the security can safely trade their securities on a specialized alternative trading systems or systems like Atlas One today, right? So at that time, there are not a lot of companies that facilitated security token offerings. SolidBlock was one of them. My co-founder, Yuval Wirzberger, founded the company a few months before this deal happened, put together a website, started advertising the services. So Elevated Returns reached out to Yuval to facilitate the deal on the technological side, right? So we did the smart contract, basically a blockchain a blockchain program that connects investors with the deal and facilitated integrations with compliance and so on. So basically, the objective to raise the capital for St. Regis, like I said, was recapitalization. And there's some sub-objectives like maximizing revenues, increasing occupancy, some renovations, right? So there are quite a few things listed in the in their private placement memorandum, right? What the use of the funds would be. So as I mentioned, the alternative of public offering was way too high. This is just basically a description of the financials of the deal. There are 179 units. The property value was at 224 at that time. There was a mortgage senior lender on the deal, JP Morgan. Now, we actually had to go, or the Elevated Returns had to go to JP Morgan and ask them if they had an issue with tokenization, at which point the bank said that there is no issue as long as you do not tokenize over 20% of the deal. And that's why 19.5% of the deal was tokenized. That's how we came up with $18 million, right? That was the limit. If that wasn't the limit, I believe that deal would definitely raise more. So $18 million was roughly 19% of the equity, as you see. It's 94% in equity. Okay, NOI was 13.2 million. So basically, we digitized the offering. SolidBlock tokenized the offering, and there were several brokers on the deal. Elevated Returns. Then there was the issuer, Templum, and Microventures, which was the broker dealer of Indiegogo. So they all collectively brought 22 investors on board, right? The regulation that was used for this deal was Reg D 506C, which is basically an exemption from full prospectus and ability to sell these securities to accredited investors in the United States. And I believe there might also have been Reg S to sell it to investors outside the US. So there are several reasons why we prefer, tokenization over traditional. And I think that George has already covered some of these, but just very quickly, with traditional methodology, you have paper certificates. With our methodology, you have securitized tokens, basically a digital version that creates an opportunity for the investor to decide when they want to trade and trade much easier. The costs, as George mentioned, are much, much lower for both issuance and administration. The liquidity risk is much lower. Also, obviously, exit is much easier for investors. It's easier to facilitate the transaction. The assets are liquid, and as I mentioned, easily tradable. There are additional benefits like distribution of dividends can be done electronically. All of the processes of investor management are also done digitally. So basically what happened was the deal started at around June 2018. We finalized all the structuring in August, so the legal and the smart contract and so on. And by October, all of the funds were in, and the tokens were issued. Right? They were issued. They were distributed. So what happened after the issuance? Actually, you know what? I'll kind of go into the stages of tokenization before we'll get to the critical and the most fun part of what happened after. So what do we do? How do we do an offering? How do we tokenize an offering? Well, the first stage when a client comes to us, so SolidBlock is a marketplace. So we have actually clients on both sides. We have property owners, so we have deal flow. And then we also have investors, but the investors actually come to us mainly through platforms like Atlas One, right? So we have certain clients in different countries, and in Canada, that would be you guys. So basically, when a client comes to us and says, I have a property, does it work for tokenization? Not every property actually works with tokenization. Well, technically, you can tokenize everything, but the question always should be, should we tokenize a property? So first of all, we have to create an overview of the business, the risks, and the financials, right? We have to see if the asset itself is providing enough yields to cover the risk level, right? And the risk appetite of most investors. It depends on where the asset is. It depends on how much the asset is earning. Now, in the case of St. Regis, that's a landmark property, you know, and with AAA assets, it becomes almost a no-brainer. Everybody it seems to want a piece of these properties, right? So we need to understand the offering detail. What is being offered? Is it the equity? Is it the proceeds? You know, is it the yield? So what are kind of different outputs of this property? And SolidBlock, for example, has stringent thresholds of properties that we are adding to our deal flow. So 99% of the properties that come to us, we're actually not going forward with for that reason. We may be able to later do a different class of properties that we're doing, you know, providing a third-party service for. At the moment, SolidBlock is an issuer on every property that we tokenize. We go into partnership with a property owner. And the reason why we do this right now is actually, number one, to protect our investors, right? So we take responsibility for whatever goes wrong. So what we do actually with properties, we didn't do this with St. Regis, of course, because we were not, in fact, the issuer. We were the tokenization platform of choice, but the issuer is taking responsibility for the deal, and the issuer is creating several recourses in case, let's say, the deal fails, right? So what happens? Every investor that comes to us is asking, what happens to my investment in case of default, right? You know, in case I'm not getting my dividends, or in case I'm not able to get my shares, or, you know, to access my investment. So that's why right now SolidBlock is coming in as an issuer, because the industry is fairly new and we are creating standards as we go. So we basically use methodology that is very, very traditional in the real estate industry. For example, if the asset is going into default, there is a third-party administrator that will take over and that will first try to make the asset, you know, try to ameliorate the asset's ability to produce. And if that doesn't work, we'll liquidate the asset and then redistribute the, you know, whatever is left in the asset between investors. So that's just one example of what, you know, the issuer's responsibility is. So what we'll do as a next step is regulatory planning, where the raise is going to take place, right? Where the investors are going to be, and then recommend appropriate compliance. So, you know, for example, if we're doing the raise in Canada, we will need to go through a broker dealer. We'll need to go through a specific type of of an entity that will facilitate the compliance, and, you know, will be our bridge to investors. So, you know, if we're doing this in the US, we have a different plan. If we're doing this in Europe, we have a different plan. So that's regulatory planning. What we're selling here are actually financial products. There are certain advantages of selling a financial product over selling real estate directly. And most of these advantages is, number one, you know, it's much easier as a passive investor to create your own portfolio, right? To get a little bit of this asset, a little bit of that asset, and so on, as opposed to pretty high requirements in capital to invest in standard landmark deals, right? If it weren't for tokenization of St. Regis Aspen, investors who came in initially, even the 22 investors who came in, would not have been able to put their money in, right? Usually you have either ultra high net worth individuals or most likely equity funds that are participating in these deals. That you wouldn't be able to, as an individual investor, to invest. And I know several investors that are, recently became accredited and got in on this deal. Now, in the secondary market, where this deal is trading right now with over 800 investors, anybody can get in. And even as a retail investor, you can go and you can acquire a piece of St. Regis. Like, that's unprecedented. That was never possible. That was never possible before. So the next step sorry, I think I am going too slow. How much time do I have left, George?
Keep going. Don't worry about it.
Keep going?
Yeah.
All right, sure. Okay. So so the next step, as I mentioned, after we create compliance strategy, regulatory strategy, we'll actually have to figure out the structure, the organizational structure where the SPV will be located. Now, the way we tokenize is through creating a special purpose vehicle that will own a piece of the property, right? It can either own a piece of the property, and I see there are some questions, and I'll get to them in a minute. That will either own a piece of the property, or that SPV might actually own a piece of the management company, or some sort of other company that holds the property. Why do we do it this way? Well, because we have to use existing corporate structures to create digital real estate, right? So you're actually owning a security issued by the SPV. So basically you're owning a security that's backed by the SPV that holds the property. So backed by the property indirectly. So what happens is we create that SPV. It can be done in Delaware. This specific SPV for the Aspen, I believe, was open in Delaware. And then it got into an agreement with Elevated Returns to buy 19% or 19.5% of the St. Regis, right? So as the SPV raised $18 million and transferred the $18 million to the owner of St. Regis, right? It received 19.5% of the equity of the hotel. So that's basically how tokenization is structured, and that's how it happens. So the final is dividend distribution. We have to plan out based on the business model, whether it's dividend or interest, right? It could be structured as a loan. So then when investor invests, when you buy the token, you specify where you'd like to get your dividends or interest. If you want to get it in the bank, then you add your bank account. If you want to get it in your crypto wallet, then you specify the crypto wallet. So those things are planned in advance. So this is the planning stage. Then we're preparing the offering documents, which is an offering memorandum or private placement memorandum. They have to have all kinds of agreements, because this is a very traditional real estate deal, really. You're selling a piece of property to the SPV that's being tokenized, and those securities are held by investors. So we have a very, very traditional set of sales agreements, management agreements, operating agreement, all of that, right? When you invest in a property and in a tokenized property, you're going to have some sort of a data room where you can actually go through all these agreements if you'd like. Right. So, and it's of course recommended to go through all of those agreements if you can, or at least go through the PPM. It's the PPM has of course a lot of legal language, but it also has a lot of marketing language, right? So you will understand the economics and the mechanics of the deal. You will understand what the company is planning to do with the deal, what the company is planning to do with the asset, right? If it's planning to sell the asset, in which year the asset is more or less planned to be sold. So when you're going to be able to get your upside, if there is an upside, you'll understand what is the dividend distribution. You'll understand whether the dividend distribution is guaranteed or not. In some cases it may be, and in some cases it depends on the market. So basically it's an economic document, right? The private placement memorandum, economic and legal document. So very quickly, I already mentioned how much Aspen, all the Aspen economics, but basically, was $1 per share. Now it's trading at $1.30, $1.28. That's where it's set at. There were two terms that you may encounter: soft cap and hard cap. Soft cap is the minimum investment on the deal, what is determined to be kind of enough for the deal to go through. Maximum is as much as the deal can take. The smart contract, as I mentioned, is a blockchain program that connects investors to the deal. There were audits on that contract by two of the big four. And that's it, guys. I'd be happy to, okay, sorry, I forgot to get to the most interesting part. There were 22 customers in the beginning, 22 investors. As soon as it was listed on T0, which is an ATS in the United States, it was traded already by 200 customers, and now there are over 800 investors in the deal. The token volume trade monthly is 5 to 10% of the whole deal, and it's pretty good volume. So that's exciting. That's exciting that we're seeing some traction in this specific deal, and I'm hoping that we're going to see a lot more. And we're adding now quite a few new projects. So in 1 year, they will be trading. And the last point, if you think about the IRR that the investors got, instead of spreading the annualized return over 7 years, which what would have happened if people invested in this deal, right? They would wait 7 to 10 years for this deal to be either refinanced or sold, and that's when they would get their upside. When they sold the project a year and a half later, they were able to actually get around 20% return if you add all the dividends that they accrued during that period. So thank you.
Great. Yeah, thank you very much for that. We had a couple of questions.
Yeah.
One or two of them are kind of very Canadian specific, so I'll try to sort of generalize it. So in Canada, we have a private fund concept called a MIC. It's sort of a mortgage investment corporation. It's basically, think of it as a fund for commercial or residential mortgages. The question was, could tokenization work for those types of structures?
Yeah, absolutely. We actually have quite a few requests and potential partners that we're discussing this with, and you can tokenize anything. The question is whether there is value. What are the returns? What are the general returns from those mortgage funds, right? So from what I know, the returns are not that high, 3 to 4%. So you got to ask yourself if
they're higher in Canada.
They are? Okay.
Yeah.
Okay.
That's what actually makes them quite attractive in this market. So
awesome. Okay.
I'll add a little plug here. So I think it's a terrific asset class for tokenization and using digital securities for, and in fact, we're developing a pipeline of potential offerings here in Canada for that.
That's awesome. I'd be happy to, definitely take a look. Yeah.
Yeah. Actually, something we could look at maybe for global issuers, I'm sure people outside of
institutions are going to love it. Institutions are going to love it, especially here in Israel, where I am, where it's very, very low. Yeah. Maybe 2 or 3. So yeah, institutions are going to love it.
This was
I see some other.
This was an interesting question. So, and you touched upon it. So when the AspenCoin offering was made, it was obviously made to accredited investors, as I understand. But then when it listed on T0, it was available to everyone. So I could tell you in Canada that wouldn't work because if it's an exempt issue in the first place, it needs to be an exempt issue in secondary as well. How did that work with AspenCoin?
Yeah, so in America, in the secondary market, depending on which state you're from, there are certain limitations in some of the states, but in the majority of the states, you can actually trade as a retail investor on an ATS. And T0 is actually a fully licensed ATS to trade digital securities. I think the question here, there was a question that says, why did you decide to list on T0 ATS instead of a fully licensed exchange? In fact, there are certain exchanges, certain stock exchanges that are now allowing private placements as well. I think Toronto is one of them. Tel Aviv Stock Exchange is definitely one of them because we're going to start placing our securities there. And by the way, Israel is like Canada. Actually, if you're allowing only accredited investors to participate in the primary, it's the same in the secondary. So it doesn't. I think the United States might be one of the only places where that kind of jump to retail is allowed in the secondary. So it's an unregistered securities can trade to retail in the secondary market. That's the answer to Stephen.
Yeah. While we're waiting for additional question, please, take advantage of having Yael here if there's additional questions. I mean, just a general thought. When you looked at the AspenCoin, the St. Regis deal, what was it particularly about real estate that makes it kind of suitable for tokenization in your mind?
Yeah, I'll answer that, and then I noticed another question in the chat. So like I said, many things can be tokenized, but there is a limited advantage to tokenizing, let's say, certain equity products, although there is definitely there is, but equity, for equity, there are other instruments for investment, like for example, startups can get, you have all kinds of series in the investment structure, whereas in the real estate, you usually just have, let's say, one event in the beginning, and then there is a period of illiquidity. And then when you get to a certain stage, usually, it's the end of the project, you sell it off to someone else, so you refinance. So there's really a huge period of illiquidity in the life of real estate. So that's something that we're solving. So I think, and then another thing that you mentioned, George, in the beginning, it's a huge, huge market, 318 trillion, I think you said, and a very, very small amount of that is available to the public, even through public REITs. So when we're actually, through tokenization, are offering a range of products, and usually these are projects that are smaller. It might also be larger projects that it could also be larger projects that either cannot get bank financing for whatever reason. They could be in different countries where there's no bank financing, or it could be for other reasons. So you will see larger projects, but smaller projects really don't have any other way for liquidity. So that's the reason why. Another question was here, can you tokenize raise acquisition funds for specific assets? Patrick is asking, and the answer is absolutely. You can raise, you can, specify in the private placement memorandum that the funds you're raising are for acquisition. It would usually work much better if you had, already either acquired, create some sort of an exclusive agreement with an asset you're acquiring, and actually raise funds to acquire that asset, or you can specify that this is an opportunistic fund. Both of these are difficult to raise for unless you're raising from investors who know your track record and have certain faith in you, right, as an execution force. Another thing that was
just to add to that, I think it was Patrick who asked that question. One of our partners, one of Atlas One's partners in Asia, a company called InvestX, has just announced that they're working on a digital SPAC. So so this is a little bit, I think, in the similar vein of the question of cool. trying to create a blank check company, but instead of the SPACs that you see in the US that are listed and the like, is actually keep it private but digitized, so you can still have some liquidity around it. So it's an area that that we're exploring. So that could take it even a step further to say, well, let's start with a credible sponsor who is going to look for acquisition opportunities, but let's not go the whole hog and actually list it on an exchange yet. Let's keep it in sort of token format, and then take it from there.
Okay, fantastic. Okay, great. So other than Aspen, do you have any other examples of commercial real estate ACOs with higher percentage? Okay, George, go ahead.
No, go
What
ahead.
have you seen?
No, I think it's to you.
What does it mean, higher percent of token capital? What would that, what do you think that means, Edward? What does that mean?
Yeah, which I can't bring him on board to get him to
talk as a co. You can bring as a co-host.
Yeah, maybe yeah, maybe just talk about some of the other commercial real estate deals that you're working on right now, high level.
Sure. Means higher percent of total equity raise. Okay. So basically, yeah, we're working on quite a few deals. Some are, I think the best. I'll tell you what the best deals on the market are right now, and you know, some of them we're doing. I think right now the best deals are commercial real estate that's yielding. So you know, you can actually provide the investors with an opportunity to hold a yielding property. So you know, we have some medical facilities. We have some commercial facilities with triple net leases that are occupied by, let's say, Fortune 200 companies in great locations. So all of those deals are very, very attractive to investors as a yielding deal, but yet the kind of, I think really, really attractive deals in this market will be obviously higher yield deals. And, you know, one of the deals we're working on right now in that respect is a London real estate fund where we're buying and selling single family homes. So there are quite a few deals that even residential deal is at the end of the day, we can structure it in a way that it's commercial, right? So I think we can argue that all our deals are commercial real estate. I think you might be asking how many deals have gone on the market and are trading at a higher value than they were initially were. So I can tell you that all the deals that I've seen that have gone on the secondary market, which wasn't a lot so far because the market is very young, and in the US you have a 1-year lockup. So right now, AspenCoin was our only deal that has gone on the secondary market, but you can look at other companies like Realty, which have listed properties, and they're all trading at higher margins than they were originally placed, which makes us, you know, pretty confident. We need more statistics, of course, but there seems to be 20 to 30% liquidity premium, and that's very, very consistent with other examples of properties going liquid even before tokenization, like when a property becomes a part of a public REIT, for example, or even a private REIT, it goes up in value. So that's our experience.
Question around what kinds of compliance are you able to build into your smart contracts? Maybe you can talk about.
That's a great question.
Yeah, about your particular offerings.
That's a great question because we have examined all the other smart contracts in the industry, and we're kind of disappointed to find that there's, on the smart contract level, very few platforms add any sort of compliance into the smart contract. They're basically, I mean, this might be a little bit too far too advanced for non-technical people here, but let's just say that the companies like Solidblock or other platforms are, you know, keeping compliance basically managed. The compliance is managed by the company itself. Now, a smart contract is basically kind of guaranteeing certain rights of investors, right, to a property or to getting certain benefits from the property. So what Solidblock is doing is, like, we're trying to maximize the level of rights of investors within the smart, you know, from actually the smart contract itself. How do we do that? Well, number one, we list the SPV that we are creating in the smart contract. We're adding the name and the number so that when you are investing, you know, the smart contract is public. It's done on a Ethereum blockchain, on a public blockchain. So you can see our smart contract publicly. Right, you can see in the smart contract, we list the SPV. You can go to the US registrar of companies and you can see the company registered. That's the first thing we're doing. The second thing is that we are registering each security. Oh, the security is unregistered with the SEC, right? But we notify the SEC of the issuance of the security. So we have to fill out what's called a Form D. So you can go, again, we're listing that within the smart contract. We're getting what's called a QSIP, which is an identifier for security. We're listing that in the smart contract. So you can actually go again on the website of the SEC with that QSIP number and see the security there. So basically, we're preparing for a time, and it hasn't arrived yet in the United States, for example. We're preparing for a time when the legal authorities are going to recognize a smart contract as a contract. And then you can go and you can show this contract in court. Today, what you can do, if there is a dispute of some sort, you have the PPM and you have the subscription agreement, right? So which basically is a copy, is a non-digital copy of the smart contract with even more clauses in it, right? So there's a problem, you have something that you signed and you go. Now, I think that in the future also the smart contract itself will have legal power. So what else do we do in the smart contract? We're listing what kind of investors can invest, right? Accredited investors, non-accredited investors, from which jurisdictions, which countries can or cannot invest, and we will block investors that are not within the compliance rules. There's maybe other things, but I think we may have written some blogs or videos on the subject, so I'll be happy to later talk about that.
Yeah, and those are exactly the kind of principles, and we also, kind of tokenize, securities for Canadian issuers, and those are the same sort of principles, that we have. Just maybe a wrap-up question, then I just want to talk about a few other things about the offerings we have. You mentioned, obviously the listing of AspenCoin on T0. There are other exchanges. INX is, an example on. Just your thoughts around how the secondary part of this market is going to develop in the next 6 months to a year.
Well, more and more offerings are going to get listed. And I think because we want to maximize our utility for investors, we will list on several exchanges. We're not going to put all our eggs in one basket, and we'll list on different exchanges. So obviously we'll list on exchanges in different countries. And we'll also, even within the US, we can list on several exchanges and look at the liquidity on each of them, right? And kind of maximize the utility there. I think we'll see a lot of exchange interoperability platforms popping up. So you'll be able to actually, let's say, list on one platform that will kind of redistribute it to different exchanges. So I'm waiting to see who's going to be the leader in that market. Yeah,
it looks like there's a bit of a race, on, and a lot of kind of people are trying to set up ATSs and the like. And I think, like everything, it's going to depend on who kind of attracts the most liquidity, which means who attracts sort of the best issues, right?
Yeah, exactly.
Very good. All right. Thanks. Well, if there's not any more questions, let me do sort of a quick wrap up. First of all, thank you very much, Yael. It's fantastic. I think you provided a great overview of what SolidBlock does and the opportunities in real estate tokenization. Just to wrap up from the Atlas One end, so we have 2 offerings currently on the platform. And again, you need to sign up to be able to see these offerings in great detail. One of them is Alliance REIT. This is a private REIT focused on GTA area real estate. It's got a great track record. I won't say much more than that. You'll have to go into the platform and find out more details. And the second one, of course, is an offering being sponsored by SolidBlock called London Digital Bonds. So this is a fixed income with a bonus offering backed by high quality London real estate. And we're also offering that, on our platform. Another little plug, we're going to start a discussion on Clubhouse. I've been taking part in a few of those, find those very, very interesting. We're going to try our first one next Tuesday. So follow us. It's at Atlas One if you're a Clubhouse member. We'll try to bring in guests, and the like, and we'll we'll have, continuous discussions around the opportunities around digital securities and digital securities investing. One last question just popped up and is an interesting one. What's the sort of the minimum asset value worthwhile to kind of tokenize someone? And someone sort of put 5 million.
Yeah, that was me.
Oh, that was you. Okay, good.
Yeah, no, the answer was 5 million. So
5 million.
I gave the question the answer. Yeah.
Yes, it was 5 million. I will say though, if you look at what Realty is doing, I mean, they're doing single family homes in kind of the $100,000 to $200,000 dollar range. So there are use cases that are much lower. What I will say though, if you do have to go through, and I agree with Yael on this, if you do still have to go through kind of the offering memorandum or PPM process, you do need a little bit a larger size and scale in order for it to be worthwhile. Otherwise it just it becomes too costly for a small issue to be able to do. Okay. Yeah. Terrific. Well, everybody, thank you very, very much for your time. As I mentioned, if you have any interest, any questions, here are our website and email addresses if you want to get a hold of us. And thank you very much for attending today's webinar. And again, happy St. Patrick's Day.